Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for December 5th, 2021. Hope everyone's enjoying their weekend so far. Let's take a quick look at how the markets finished off on Friday. Obviously, a lot more red on the screen again to end the week here. The Dow is down 56 points now, is sitting on support. I'm going to go through the daily charts of these four index charts, and then I'm going to switch to weekly just to show you the difference here. But the Dow sitting on support, holding on to these lows so far. The S&P 500 was also down just under 40 points, and again, right back at that prior high and holding so far. The Nasdaq 100 back to that prior high, down 270 points, so off the lows we were lower, but holding that area of support so far. And the Russell, which had moved above this long-winded channel, is now right back at those lows of that channel, but so far holding on. So if we switch back to the Dow and look at the weekly charts here, you'll see that the Dow did finish the week below the 20, second week in a row here. So slightly negative, but also, once again, you can see the support there, right? The S&P 500 is right back at the 20. Hasn't even violated that. So if you look at this, we still have higher highs, higher lows. This looks like a great little trend that's been going on for many, many months. And, we might be in for another buy setup here. Same with the Nasdaq 100. It is right back at that prior high, right back to the 20. We have slope. We have higher highs, higher lows. It looks like we may set up long once again. And the Russell, again, sitting at the bottom here of that consolidation area. We've had now 4 straight weeks of downside, and we're right back there. Again, I expect a big move here, one way or the other. We thought we were going to be running to the upside here once we broke the highs here. We completely turned around. Now we're at the lows. If we do take out the lows, I think we're coming back all the way down to at least 1700 here. So look for a big move there, or a bounce from here and a move back to the highs here. So this can go either way, but so far when you look at the higher time frames, right? I won't even bother with the monthly because everything still looks very bullish there. But the weekly, things still look, fine. The daily, a little sketchy, but hasn't confirmed a breakdown yet. Looking at the IWV, the Russell 3000, again, back to an area of support and holding. Crude oil down another almost 4% on Friday, again, also sitting at support, but this one is well into that move lower. We may get a bounce here, but even if we do, it's unlikely that we'll just shoot back to new highs here. We'll likely set up short once again for another leg lower. Looking at gold, slight bounce here, but overall, it was a horrible week again for gold. And the dollar index looking pretty good here, setting up long once again. If we go to the ETFs for the different, actually, where is it here? There it is. The ETFs for the different sectors. Starting with energy. We are below the 20. No question about it. Sitting on some support, but trending lower right now. Financial, same thing, but we're at an area of support. Technology, we did close below the 20 once again this week. So showing some weakness there at the end of the week. And we'll see if we can quickly bounce back, or it is likely to come back down to about 160 here. XLP, which is consumer staples, bouncing Thursday, Friday, but significant drop early in the week, has not recovered yet. Utilities, same thing, bit of a bounce Thursday, Friday, and is right back to that level here in the 67 and a half area that it's been bouncing around back and forth for over a month now. XLV, which is healthcare, trying to get back to the 20, not quite there yet. Consumer discretionary, same thing. Actually put in a bearish engulfing candle on Friday. There's a real lack of support here, so likely to see this back to 185. in the near future. Real estate, it's really been going sideways. There is some support down here so far, holding on. Slightly bearish, did close below the 20, but not a huge sell-off there. Industrials, well below the 20, but holding those lows so far. Materials, exact same thing. Communications is the one sector that broke down a while ago and continues to get punished here. So this one broke out of that channel and looks like it could have some more downside to come. Finally, the retail sector, which has looked a lot like small caps, right? A lot like the Russell 2000 all year. The charts are almost identical, and it's at the exact same point, back to the lows of that long-winded consolidation area. So we either break it and drop hard here, there's a real lack of support, or we bounce from there, not only get back to the top of that channel, but likely break through and move off to new highs. So there you go. The picture is certainly not as bullish as it was a few weeks ago, no question. We are at critical levels here, and we must hold these support areas on these charts. Let's look at the week ahead. Last week we had a slew of announcements. We had the jobs report, which on Friday came in much weaker than expected, 210,000 versus 550,000 new jobs. We have Omicron spreading, the new variant of the COVID virus spreading. We had a number of other economic data points out that weren't all that great, but this week it's going to be a much quieter week on that front. Monday, really, there isn't anything major that we're expecting. On Tuesday, we get the trade balance report, the Red Book report, and consumer credit. Wednesday, we get the MBA mortgage apps number. We get the JOLTS job openings number, crude oil inventories, and gasoline inventories. On Thursday, once again, as we do every week, we get the jobless claims number. We get wholesale inventories as well. And Friday, the main one is core CPI. We also get consumer sentiment in the U.S. Baker Hughes rig count, but core CPI is going to be the major one on Friday there. There was one more other thing of note this weekend. Bitcoin, actually the whole crypto market, but Bitcoin yesterday took a major drop, broke that 53,000 area of support here, and just went for a ride, down to about 42,000 very quickly overnight, and has bounced, is now hovering around 49,000 or so, where there is some resistance overhead. So we'll see if this drops back. If it does, the support areas to look out for, I believe, are 40,000, 30,000, and then 20,000. So nice even numbers there. But Bitcoin completely breaking down yesterday. We'll see what it does today. Let's look at Ethereum. We also went for a ride, recovered much better than Bitcoin has. It is back to 4,900, above 4,900, but it was also down below that 4,200 number. So again, a lot of volatility. I would expect it to continue into this week. And keep an eye on these index charts. Now, tonight, keep an eye on the futures market. We do open up at 6 p.m. Eastern time. From that point on, throughout the night, you'll be able to gauge where it looks like we'll be opening the day tomorrow. I expect a lot of volatility, so expect those futures to bounce around. Certainly the variant virus numbers not looking very positive right now. Also, one thing I cannot confirm, but I did see some posts on social media about was Evergrande actually defaulting in China. Again, I haven't been able to confirm it, but I've seen some posts saying they have officially defaulted there. We'll see if that's been factored in to these markets or if we see future sell-off because of that tonight when they open. Okay, so there's a lot going on. There's no question about it. There's a lot going on. So the one thing we can count on is volatility. Expect some wild swings back and forth. Let's keep an eye on crypto as well. I think that'll have an impact on the markets as well. So one last reminder, tomorrow being Monday, December 6th, we will be having another live market chat. As usual, we kick off at 1 p.m. Eastern. I really hope to see you there. But until then, enjoy the rest of your weekend, and we'll see you on our next update.